I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today we have a special announcement. What is it, Tom?
Yeah, we're talking about the new FHA Mortgage Insurance Premium Update. This is big news.
Yeah.
It hasn't changed for how many years?
Well, it was 2013.
2013, yeah, 10 years.
And FHA loans are insured by the government, and a lot of homeowners are benefiting from FHA's loans. The mortgage insurance, there's two types of mortgage insurance that an FHA loan has. It's an upfront mortgage insurance and a monthly, one that you pay monthly.
Right.
And the one that's paid monthly is what is been drastically reduced.
Yeah. So, and again, the way that the FHA program works is it basically gives borrowers with slightly lower credit scores a lower interest rate. And the way that they do that is by having this insurance. So no matter what your down payment is, there is this what they call the mortgage insurance premium. It's calculated on an annual basis, but it's paid monthly.
That's right. So it's decreased by 35%. And just to give you an idea what that looks like, and we'll also look at a loan scenario between a conventional and FHA here in a second, but on a $400,000 loan for FHA, the old monthly mortgage insurance premium would be $100 more than what it is today.
Yeah. And there's nothing salesy about this. This is simply like a broadcasting of a pricing update. And FHA hasn't moved these for, again, 10 years, as Eddie had said. So the amount of money that you can save, it just came out literally yesterday. This is significant. $100 a month over 360 months if you were to carry your loan out through the entire duration.
So, whenever there's a borrower who's, either we would usually say a conventional loan versus an FHA, a borrower with anything over 700 or that 680, definitely in the conventional camp. But now with this reduction, it's going to put a lot of borrowers who are in that 680 to 700 range into the FHA camp.
Yeah. And so basically, hopefully this makes sense. So this insurance premium was almost 0.75%. Okay. So that's what you pay on an annual basis. That just got reduced 35%. And that equals almost about a quarter. So the reason why, this is so great is because it's now making the FHA even that much more competitive compared to the conventional loan, even for those that are at 700, even maybe even above.
Yeah. And then I just took this scenario just so we could show everybody in the audience that the $500,000 sales price with 5% down. Now I use 5% down because FHA requires a minimum of 3.5.
Right.
So,
but we wanted apples to apples.
Apples to apples. What does it look like? 5% down with a credit score of 695.
Okay.
And when you look at, and again, it doesn't matter when you're watching this and what interest rates are in the future when you're watching this, but this is just showing you what it looks like comparatively on the same day. 5% down. Interest rate on a conventional loan would be 7.25. Any conventional loans are greatly affected by the interest rate. So we're going to see a high 7.25 interest rate on the conventional loan, 6.125 on the FHA. Remember, don't think about the rates because by the time you are watching this, rates could be higher or much lower.
Yeah, and I think what you're saying on that conventional loan is that the interest rate is affected by the credit score.
Oh yeah, yeah, that's right.
Yep. No.
Yep. And then now what you're going to see though, just to point out what's the big con of FHA? What's one of the downsides? It's the upfront mortgage insurance. Now it's financed, it's rolled into the loan, but in this case it would be $8,300, just a little over $8,300.
Yeah, and why does the FHA have the upfront mortgage insurance and the conventional financing doesn't? Well, it's because look at that interest rate. In order for FHA to publish such a low interest rate, there's additional insurance needed for that. And again, for the right borrowers, they love it. But that is a factor with FHA.
Yeah, so when we look at the breakdown of the payment, the principal and interest, tax, insurance, everything combined, and then we look right here at this row, mortgage insurance. We'll notice that the mortgage insurance on the conventional loan is about $25 more than the FHA loan. But that interest rate, because the FHA has such a great low interest rate, and now that the savings on this mortgage insurance is probably $110 compared to what it would have been.
Yeah.
So that puts the FHA loan really about $330 less.
Yeah, even before this mortgage insurance reduction, the FHA product was still better in this scenario. Now we've just added that 35% reduction. It just makes it even that much better.
Right. And so again, if borrowers have excellent credit, you're not thinking, we don't want you to think about an FHA loan. We're putting you into a conventional loan because it's definitely going to be better. Anything, credit scores over 740 are clearly in the conventional camp. Anything 720, I'm going to say, probably still going to be into the conventional. But again, if you have a scenario you wanted to run by us, let us know. We'll be happy to help. And if you like what we're doing, be sure to subscribe, comment, and like. Well, put any comments in the comment section. We'll be sure to answer right away.
All right. Well, thank you, folks.
Take care.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.